Hello, welcome to Bread FC, the home of profitable traders. Today, I'm here to show you guys one of the secrets I learned from trading. Recently started this channel because I found out that a whole lot of so-called gurus out there, they try to make it difficult for new traders to stay profitable by selling them gibberish courses, all in the name of trying to make money off them. So I decided to create this new channel where I could show my trading journey and show people how I've been able to turn series of $10 to thousands of dollars, and also show everyone watching globally how they could stay profitable. I trade different kind of concepts, and I recently discovered that one of the most profitable concept is what I call the top-down analysis, combining it with price action and then the smart money concept. So it's just a tool where I crafted it out, and I also call it the Bread FC secret strategy. Basically, what you need to do when trying to understand what happens in the financial market is you need to start from the higher time frame and then to the lower time frame. Most people don't understand the logic, right? This whole session comprises of two parts, right? The first part is the psychological part, and then the second part is the technical analysis part, right? So the psychological part that I'm talking about has to do with your mindset, has to do with your mental state of health. Are you happy? Are you okay? Are you even feeling fine? If you're sick, I don't think you should be trading. If you're unhealthy, if you're not just on that total well-being, you should just stay off the market and just observe. Your fear and your greed is like the two major uh emotional part of psychology when it comes to trading, because most times you get into a trade, you're profitable, and then you want to get greedy. A trade move from $100 to 500 or 1,000, and then you want it to get to 10,000, and then you lose everything, right? So that's a greedy mindset or a greedy emotion. And then there's the fearful part where you analyze your charts and everything is ticking that you should execute a trade, and then you're fearful to take that trade. So you don't want these two emotions messing with you, the fear and greed, right? So haven't managed that, then you will now transcend to the other part, which is now the technical analysis. But I'm going to do a theoretical part first before we dive into the whiteboard, right? So the technical analysis part is where you look at the market from the higher time frame, and then you bring it down to the lower time frame, and then you look for your entries. Now, how do you navigate the higher time frame? The three time frames I look at is the weekly, the daily, and the 4 hours. These are the three time frames I look at. The weekly is just to show you a roadmap. Where's the market going to? Is it going up or is it going down? In trading, you just have one decision to make: up or down, bullish or bearish, buy or sell. Straight up, it's simple like that. So you don't need to overly brainstorm or overly think what you're supposed to do. So once you look at the market from the weekly, is it going bullish or is it going bearish? If it's going bullish on the weekly, you take that. Once the daily tells you it's going down, remember the weekly said it's going up, now the daily said it's going down. So what do? Come down to the 4 hours. Once you get to the 4 hours, and then the 4 hours, you look at it: is the market going up or down? If the market is going up, so technically the weekly says it's going up, the daily says it's going down, and the 4 hour says it's going up. Now your bias is to the upside. The higher time frame has given you a roadmap that the market wants to go bullish. When you come to the lower time frame, you look for bullish patterns, bullish sentiments. Your point of your POI, that's your area of concentration or your point of interest, should be projected to the upside. So once your POI is projected to the upside, now you know that you're looking for buys. You want to stay smart in the market. You just don't want to jump in and jump out with losses, right? You want to jump in at the right time. If you need to wait for a day for your setup to align, if you need to wait for a week for your setup to align, you just wait for it. If you don't see your setup, you move on to the next pair. There's nothing. I advise traders to have at least 3 to 5 pairs you're actively trading, right? So if you don't see it in this first one, you look for the second one. You see, don't see it in the second one, you look for the third one. Technically, I have like 10 pairs I look out for. This is it. Like the secret is simple. If you miss the direction of the market, you're losing the trade. Right. It's just like you go to the train station and you want to board the train, you're going to the north, and then you take a train that is going to the south. Automatically, you've already lost your direction. Like you're going nowhere. The trend is your friend. The trend is your friend. So if the trend is bullish, lean towards the bullish side. If the trend is bearish, lean towards the bearish side. By so doing, you just come to the lower time frame, look for patterns that tells you sell or buy. This gives you optimum entry. The goal of coming to the lower time frame and looking for patterns that tells you to buy or sell is for you to get optimum entry. You want to reduce your drawdowns. You don't want to take a trade and for 2 hours, 4 hours, it's fluctuating between buy or sell, buy or sell, buy or sell. Those are not like the best trades. The best trades are trades that the moment you execute it, boom, 30 minutes, you're already in profit. Boom, an hour, you're already in profit. Boom, 2 hours, you're already in profit. I mean, technically, the time frame for you to get into profit doesn't really matter, but you have to get optimum entry. The optimum entry reduce or minimize your levels of drawdowns. So technically, this market is leaning to the upside. So what then do I do? Now this is a QML pattern, what it looks like. Price makes a low. Of course, this is downtrend, right? Then it makes a high, something like this. It makes a low, and then connects back up, right? And then makes another low, right? So technically, this is how the market navigates, right? It moves. This is the market sequence. The market just don't go up, it comes down, it goes up. Why does it do like that? These are human emotions. You need to understand that you're dealing with the smartest people in the world. And when you're dealing with the smartest people in the world, they are all about to take your money. It's nothing. Like it's not a rocket science. It's either you take their money or they take your money. So if you lose and I make profit, I have taken your money. I come to this level, I see this is a sweep. This is a sweep. Price make this sweep, right? This is a sweep. So I see this as a protected low. Price is not going lower than this. So I just have my, I'll show you how to do all of this on the trading view. So I put this as my protected low, knowing fully well that price is not coming lower than this. And then I have this as a level I call my QML level. I just draw it into the future, extending it into the future. Most times I frame it like a frame like this. I just draw it into the future. Now pay attention. This is where you want to pay attention, right? Everything I've been explaining, if you miss this part, you miss the trade. So it's not a rocket science. You just need to stay focused here, right? So this is where price make a market shift. This market shift, right, tells you this thing you see here tells you that price is about to go bullish. But then it starts coming down here. It starts coming down here. Remember, this is a sweep. This is a sweep. Price swept this low that was here. Price swept this low. I like to put it like this so that you know the difference between the charts and the market, right? Price swept this low that's here, and make a sweep, right? Why did price sweep this low? Price swept this low because a lot of people the so-called double bottom traders, this traders, they come here and then they take their trades, right? When they come here, they execute their trade here and price sweep this low, possibly put their stops here. Price sweeps it. When they came here, they bought thinking it's going to go up. Now they have seen the weekly time frame is bullish, the daily is bearish, the 4 hour is bullish. They're expecting the market to go bullish. And when price gets here, they enter here, right? They enter this point. Let me make it like they enter at this black point, right? What then happens? Price comes down. The moment price gets down, automatically their stop loss have been swept. They lose. They technically entered this trade for a buy, which is a good bias because the higher time frame tells you to buy. But what happened? They lost. Right. So the strategy I'm showing you is supposed to tell you how to be smart. That's why it's called a smart money concept, mixing it with price action and top-down analysis. This is a combination of three popular trading style, and then I bring it together and form one style, which I call the bread of the secret. Right. So the moment price get to this point and sweeps this place, right, all you just need to do is wait. Now you have seen price sweep down. It has taken the liquidity here. The liquidity here is what we call inducement liquidity. Price has taken the inducement liquidity on this level because when you see things like this is money hanging all over here, right? So price has taken their stop loss. The moment price takes off their stop loss, you see an impulsive move to the upside. It comes down again, and then it goes to the upside, come back. Of course, this is the market pattern. The moment you see this sweep, this is what we call the market shift. Some people call this church, some people call this change of direction, change of character, different names, but I just call it market shift. What does it mean? That it's letting you, this is a sign to tell you we are headed to the upside. Now you don't need to rush it. You now know you're headed to the upside. What do? Come down to this level that was swept, right? You come down to this level that was swept. The moment you come down to this level that was swept, right, you come down here and wait for price. This is supposed to be your optimum entry. This is supposed to be your entry. The moment you enter here, right, because you have seen this sweep, this now becomes your protected low. You put your stop loss here. This is your entry point. This is your entry point. Right. Now, once you see price here, automatically this becomes your what? POI, point of interest. Gotten the direction of the market. The last one is your last tick is your QML level spotted, and then the last thing you need to get is your says buy, then price action. What's your price action? The moment price gets here, right, there will usually be an impulsive move to the upside. So most times when you come down back here, right, all you just need to do is look for a bullish engulfing or morning star, right? A bullish engulfing. What you look for in your POI is POI bullish engulfing, bullish engulfing, or morning star, right? The moment you spot that here, the next thing you see price do is an impulsive move to the upside, right? So you enter here, your entry is here, your stop loss is here, your target is here. So usually we do 1:3. So if you're risking $100, you're looking to make $300. If you're risking $1,000, you're looking to make $3,000. If you're risking $10,000, you're looking to make $30,000. So this is how to strictly get your entry and your exit. You know how to identify your entry and your exit using the QM or the Quasimodo strategy, right? So in the next video, I will be explaining on risk management, how to manage your risks, knowing what amount to risk to know what amount to get. The 1:2, 1:3 risk to reward, I will decipher that in the next video. It's one thing to know when to enter the market, and another thing is knowing the amount you're risking per trade so you don't shoot yourself in the leg, right? So I hope you watch this video. You might not get all of this information just watching this video one time. You can watch it over and over so that it sinks and marinates into your system, so you understand how to use the smart money concepts, the Bread FC strategy, and stay profitable. So thank you very much for joining Bread FC, the home of profitable traders. My name is Noel. Stay profitable and have a blessed day.